Don't be fooled by the media. They always say, sales are down 30%, but they never ever say pricing is down 30%. Pricing is remaining at all-time highs. Let's start this off with a look at Canada's current inflation situation. As we all know, the Bank of Canada has increased their policy rate to a number of 5%, the highest that we've seen in 22 years. And the reason being is that they're trying to combat inflation and to bring our inflationary numbers down to the 2% marker that they feel most comfortable with. And from there, they will start dropping these rates. And the reason why these rates have gone up is when the Bank of Canada sees these inflation numbers going upwards, they try to curb that by increasing lending rates in the hopes of people to curtail their spending and to make sure there's not such a supply and demand issue in the marketplace. People stay home. It creates less pressure on commodities, which will in turn hopefully bring these inflationary numbers down. Our inflation was as high as 8% last year in 2022, or I would say almost 2 years ago now, as we're in 2024. But 2022, we saw inflation as high as 8%, which is 4 times the marker that the Bank of Canada is comfortable with. We did see back in November, the inflationary number drop all the way down to 3.1%, which we've been doing a really good job in going downward. But December was a little bit of a surprise, and we saw an uptick in inflation by 0.3%, where now the inflationary number for December came out to be 3.4, which put the Bank of Canada at some pause for concern. Inflation has stayed predominantly high since March of 2021, and that's due in part to all this free money that was handed out by the federal government during COVID. So we have been put on the back foot in terms of our economy because of everything that's happened with COVID, and we're still seeing the effects today. And how does this affect you in the Vancouver or Canadian marketplace for lending? Obviously, we're all hoping for these interest rate numbers to go down. January 24th is the next policy rate for the Bank of Canada. Most experts are stating that they believe that they're going to hold pat here so they can see what the next month's inflation numbers are. But if we do stay pat here and they're not good for January, we could be looking at another rate increase, which nobody wants here. A lot of people in the marketplace were talking about interest rates or the Bank of Canada policy rate dropping as soon as March. But with these December numbers coming out here in January, this could put things in a little bit of a tailspin and putting a pause on any of those numbers and those hopes for so many people to see some relief on their variable rate mortgages or their home line, the credits, things of that nature. This high inflation has definitely had an impact on the marketplace for both buyers and sellers. Obviously on the buy side, higher inflation means higher interest rates, which means the higher cost of borrowing. So a lot of people are either out of the market completely or can't buy what they need to be, so they're in a holding pattern until these rates can come down so they can have some more borrowing power. In the flip side, how it affects sellers, there's not as many people wanting to purchase your home. A lot of sellers also have the same concerns because it's this logjam and this never-ending circle. Sellers don't know where they're going to go, and that is another reason why they're holding up on their homes, because they know that if they get out of their mortgage, they are looking at some higher interest rates as well. So it's creating this cycle here, which is a circle of this logjam of inventory. We've seen historic low sales. We've been through that on my last market report, 33% below the 10-year average in terms of sales numbers across the board of Greater Vancouver. We're hoping for some more inventory coming to market in the spring and some more buyer activity, but with these new inflationary numbers, this could hold us in a standing pattern where we're seeing in a lot of sub areas across Vancouver single-digit sales in a month, which is just crazy. Vancouver's real estate market has been very, very resilient, and we know that even through these interest rate hikes and these 22-year high policy rates, pricing still has not been affected at all. We know that condo pricing and townhouse pricing remains at almost all-time highs in terms of average price point, and the detached market is still within the 90th percentile of all-time highs and price points. There's a lot of people out there who are calling for a collapse. We haven't seen a collapse, since the 70s. Maybe you've seen this clip from the CBC in the 1980s where people were still complaining about how expensive real estate was, blaming immigration, blaming newcomers to the country, increasing property, but that is not the issue here. We just can't build. The ocean, the mountains, the American border, the Fraser Valley with all the agricultural land, we're really hamstrung with what we can do. And that is why Vancouver and the markets around the Lower Mainland and Fraser Valley have not seen these huge tanks despite these outrageously, well, I shouldn't say outrageously high, but outrageously high interest rates to my generation. For those that don't know, the average rate for a mortgage in the history of Canada is about 8%. So even when we were seeing some fixed rates get into that 7% rate, that's still below the average that we are used to here in Canada. So as we start seeing these numbers slow, we know that fixed rates are dropping. I know in December I had a client with a fixed of just over 7%. We couldn't get them into the marketplace, but now I have clients getting fixed rates in the mid 5s. So we're seeing some movement downwards. The bond markets have been moving downwards, and the bond markets affect fixed rates. The Bank of Canada's policy rate affects variable rates, and we're hoping that variable rates will start going downward, which we haven't seen that happen in quite some time. When we kick it over to some of the experts in the field, Benjamin Tell from CIBC has stated this, that he believes the Bank of Canada is done in terms of raising interest rates, and the next question is, when will they cut? He goes on to say, I think the market was a bit optimistic about when the Bank of Canada will be cutting. They were talking about April. I think it would be more June, July, he said. He continues, the Bank of Canada has to make sure that the inflation is absolutely dead before they cut interest rates, even if it means keeping it up for 2 or 3 months extra. Charles St. Anard from Alberta states, the increase in headline inflation, the relatively unchanged core inflation, and the rise in core inflation's momentum will provide reasons for the Bank of Canada to remain cautious on inflation. As such, we believe it remains too early for the Bank of Canada to officially declare victory on inflation. Looking ahead, the Bank of Canada is unlikely to contemplate rate cuts until inflation has been brought substantially below 3%. This is unlikely to happen until the spring and could be delayed if inflation proves to be stickier than expected. So as you can see from a couple experts in the field, they are not declaring that the Bank of Canada is going to raise rates, but we also know Tiff McCallum and the BOC have been unpredictable at times, and they also stated that if the numbers aren't looking good, they will raise rates again. But hopefully this will provide you some confidence in the marketplace, especially with your due diligence. If you are a buyer looking to purchase, to get your pre-approvals in, because if rates start to go up, if you get your pre-approval in, usually they have a lock for about 120 days, and that can save you some money and save you some time and headache and frustration as well. But I do believe personally, I don't think we're going to see another interest rate increase, but if inflation numbers don't come down below that 3% marker, I may switch my point of view on that. With November, we were so close, sitting at 3.1%, and we were very, very hopeful for that December data to finally drop into the 2% range, but we are still a little bit away from declaring victory. As we saw those inflationary numbers increase just 0.3% from November to December, which seems very insignificant. Something to keep in mind, the consumer price index rose 3.4% year over year. So those are items such as, your food, your gas, household needs, and that is something that the Bank of Canada and everyone else in Canada is trying to put a hold on to bring down those inflationary numbers. As we look at boots on the ground, what I've been seeing within my own database, as well as monitoring the market with other colleagues, the market definitely is starting to pick up. Since the last Bank of Canada policy rate announcement, which happened earlier in December, I've had a lot of buyers starting to come out of their shells and start to kick tires on properties. I have currently over 14 buyers on my board that have come out since December who are starting to get their pre-approvals in and starting to really kick these numbers in. The media, the Bank of Canada, all this sort of stuff with these inflationary numbers coming down, people calling for interest rate cuts, it's giving some excitement and stability into the marketplace. January 24th will be a very, very important date because we will see what Tiff McCallum and the Bank of Canada states in terms of obviously their rate hike or hold or maybe decrease, which I don't think is going to happen on the 24th. But more importantly, what is he going to say moving forward to the next policy rate announcement? But what I can can say to all of you, and I mentioned it to you before, if you are a buyer, get those pre-approvals in place. You don't want to be caught with your pants down. You want to be ready. So if properties come up that fit your description and fit your needs, you're going to need to you need to act decisively. There's such a lack of inventory out there, and it could be months before something else like that you want and need will come to the market again. And if the further down the line we go, the closer we are to those rate decreases. And mark my words, when we start seeing some steady rate decreases, and if there's some pretty prominent ones, a 0.5 drop, a 0.75 drop later in the year, there's going to be a lot of competition out there. For sellers, it's still a really good time for you if you have good product, because there is a lack of inventory. Don't be fooled by the media. They always say, sales are down 30%, but they never ever say pricing is down 30%. Pricing is remaining at all-time highs. If you want a copy of the stats, reach out to me, shoot me a DM, shoot me a text message. I can send you all of that data. But more importantly, just book that strategy call with me. My booking calendar is in the description below. I can provide you with all the data, whether you're looking to buy or sell, to formulate a plan moving forward. I've been talking with a lot of my buyers who are wanting to wait till maybe the spring or the fall to buy. They always say, hey Kyle, it's still a little bit too early for me. My rebuttal is, you can never be too early when you're planning for a purchase that's going to be hundreds of thousands of dollars or millions of dollars. Think of how much due diligence you do on a car. It's important to do even more due diligence on your house, and that's why I like to have these strategy sessions, because we can really game plan months in advance, which is going to help you with your decision making. Because here in Vancouver, when property comes up and it's good product, you need to be able to make that decision quickly, whether to go for it or move on to the next one, and you don't want to be rushed. And that's why setting up these property searches, these strategy sessions, really help in building that out. In any case, I am Kyle Mark, your Vancouver realtor, and if you're looking to buy, sell, invest, or relocate in my beautiful city, Vancouver, make sure you get in touch with me, and I'll see you in the next one.